Business owners, don't overpay your taxes. The new tax law made several key changes, and some of these changes are effective in 2025. You still have time till the end of the year to apply them and make a huge difference on your 2025 tax return. My name is Svetlana Kim Chon, and I am a California CPA. Let me walk you through what is changed and how these changes could affect you. On July 1st, 2025, President Trump signed the One Big Beautiful Bill Act into law. This new law provides significant benefits to working families and businesses. And today, we'll go over two important business tax changes, Section 179 and 100% bonus depreciation for 2025, and how these changes affect you at the federal level and here in California. Section 179. What is Section 179? Let's say you purchase equipment to use in your business for $100,000. Normally, you depreciate or expense this full cost over several years. But under Section 179, you can deduct $100,000 in the first year you start using this equipment. For example, for a C corporation, generally, a $100,000 deduction could save you around $21,000 in federal taxes. To qualify for Section 179, you need to meet a few requirements. The purchased asset can be new or used, but it needs to be new to your business and used for business more than 50% of the time. Qualifying assets include machinery, equipment, computers, software, office furniture and equipment, eligible vehicles, and specified improvement to existing non-residential buildings. You cannot use Section 179 to create a business loss, and there's a limitation to the amount that you can deduct each year. Under the new law, for assets placed in service starting January 1st, 2025, the maximum deduction is $2.5 million, with the deduction phasing out when total qualified assets placed in service reach $4 million. Both limits will adjust for inflation each year after 2025. California, however, keeps much smaller limits under Section 179. The maximum deduction is $25,000, with a deduction phasing out when total qualified assets placed in service reach $200,000. Please keep in mind, some assets that qualified for federal Section 179 do not qualify in California. 100% bonus depreciation. 100% bonus depreciation works a lot like Section 179, but it's more flexible. There's no annual amount limitation, and it can create or increase a business loss. It covers many of the same assets as Section 179, and additionally include land improvements, interior improvements for non-residential buildings, QIP. However, it does not apply to exterior building improvements or residential property. Please check with a tax professional for the full list of qualifying assets under 100% bonus depreciation. Before the new law, 100% bonus depreciation was only a temporary provision and was scheduled to completely phase out by 2027. In fact, in 2025, the deduction had already dropped to 40%, meaning you could only deduct 40% of the full cost of qualified assets in 2025. The Big Beautiful Bill made 100% bonus depreciation permanent for qualified assets purchased and placed in service after January 19, 2025. The new law also introduced a temporary provision called Qualified Production Property, QPP. Normally, non-residential buildings are depreciated over 39 years. With QPP, you can deduct the entire cost of the production use portion immediately in the year the building is placed in service. To qualify, construction needs to start between January 19, 2025 and January 1st, 2029. and the property has to be placed in service before January 1st, 2031. For example, if your company builds a $10 million manufacturing facility in 2025, and at least 80% of this facility is used for production, you can deduct $8 million, the entire production use portion, in the first year it is placed in service under the QPP rules. California, however, doesn't allow bonus depreciation. On your California state tax return, you depreciate these assets over several years. These are two important tax changes for 2025 that business owners need to know. Both Section 179 and 100% bonus depreciation offer great deductions that reduce your business taxable income and your taxes.